Hello and welcome back to what may be the last normal weekly recap of this year, because on the next 2 weeks it's just gonna be recaps of paper trades, because well, in the next 2 weeks we have holidays and price action tends to be weak. It's my second year trading around Christmas, so I still don't have a lot of experience, but we will see what we can get on the next weeks. On this week, it was really slow for me. Monday, we had nothing because I was just trading the PM session. We just straight dumped on the AM session, right there. And during the PM session, it's just chopped around and literally not a single setup formed around PM session of Monday. Now, coming into Tuesday, hopping on the 5 minutes, we were inversing all this left side of the market, and in my opinion, we were drawing to this liquidity right here, which was a high inside the BPR, the strongest PDA array on the market. And we had an FP at 830. Now, usually on this type of days, I look for a one setup for life, as Doji calls it, which we take the data high or the low, and then we look for a setup to the other side. As we can see right here, this is the data candle, and the data high was swept, and we didn't have any type of setup down there. Now, I was bullish, as I said, to this high during the day. And right here, we swept this low for the third time, which may not be the best, because if we keep sweeping it, it kind of shows bearish, but none of the candles closed below this area, so it shows weakness to the downside. So the market was strong. And right here, I saw this inverse, which I didn't mind to take because my bias was up there. I will target this high, and my stop loss will be around here. So it will be a 1-to-1 R. Now, I traded top step, and recently the top step X software has just been crashing because they say they have a lot of new clients, and it's tough for them to keep up with all those people. And I couldn't take this trade, and that developed a real problem. As you can see right here, we already swept this high that I was targeting, but I was still bullish. And we left this BPR right here and this fair value gap, a big one. Now, usually what I would do right here was I would wait for us to tap this, create an intermediate term low, which we did. We created here an intermediate term low, but we didn't tap the fair value gap. And I would wait for a setup to the buy side. And that's exactly what I did, but we didn't tap the fair value gap. I took this because ES had already tapped this fair value gap, which will create something that we may call a fair value gap SMT. And because I was still bullish, I entered this trade and I got immediately wrecked. I wasn't really on the wrong side of the market, because if I zoom out, we can see that later on the day, we went to my target. So my bias was right, but my execution was wrong. On hindsight, it's easy to explain this. If we go on the 15 minutes, we can see that we took a high it's obvious. It's obvious on the 15 minutes. So when we take this high on the 5 minute, on the 15 minutes, we could wait for a 15-minute sweep or a 15-minute delivery and then long. Or we could wait for a 5-minute sweep or 5-minute delivery and then long. If we long on the 1 minute, we would be, unless our bias was really strong, which my bias wasn't that strong, we would be zoomed in. We already took buy side liquidity. Now we could rebalance to equilibrium, which we didn't. I took my trade above the 50%. We didn't even tap the 50% of this range. Or we can just come back to sweep liquidity and just create buy side liquidity for later. And that's exactly what we did. It still leaves me to blame because I entered this trade. And it's easy to think that I entered this trade because I was trying to make money and not just because I was trying to win a trade. I was trying to make up for the profits I didn't take on the trade I couldn't take because of top step. And yeah, that just leaves me to blame. On Wednesday, I was bullish till this high because we left relatively equal highs. But I was clearly on the wrong side of the market. We just expanded down, and for my model, I got a total of 0 trades. Fast forward to Thursday, we had CPI news on the 8:30 candle. Let's go back on the 15 minutes. We weren't delivering from the highest fair value gap on the leg, which was this one. But we were tapping this order block. But that's not the most important thing right here. On this big wick, we were above this 15 minutes and also 1 hour fair value gap. If we go on the 1 minute, we can see for us to respect once again the 15 minute, we will need to come back below this fair value gap. So right here we have this one. When we were up here, I wasn't really thinking about it. I knew that it went delivery from the higher fair value gap that I just talked about. So I was waiting for us to tap that fair value gap and then take a short. But when I saw this momentum to the downside, I started thinking, okay, right here we have some sort of low resistant liquidity. We have the 930 wick, which is a good pool of liquidity. In my opinion, we would take this 5-minute low. So I took this right here and I was targeting that this. Looks a really good trade. The problem here is that I can't really show on the 1 minute, so I'll show on the 15 second. I was being too careful. So when we took this low right here, I went break even. So I went break even on this week, and as you can see, my entry was just right there. We tapped my entry, I got stopped at break even, and right after that, we went straight to my TP. Once again, leaves me to blame. It's my fault. We had low resistance liquidity, which means that I could have went break even just when we took the low resistance liquidity, which wouldn't have stopped me at break even. Or if we go back on the 1 minute, if I had already told myself that if we reverse this, I will take this setup, I could have taken the setup just 2 or 3 points above the close. And if I had taken that entry, I wouldn't get stopped at break even. Well, and that just leaves today. On the open, I was bearish because we have this kind of really nice looking low resistance liquidity. But as we can see, this will be left for another day. It's really tough for me to take a win on this type of OPEX days. And that's it for this week. Next week, Wednesday and Thursday, we have the holidays. So market is open on the 24th, but there's probably not going to be any volatility. The market will be just chopping around, which leaves Monday, Tuesday, and Friday. And this applies for both Christmas and New Year's Eve. And on those Mondays, we have no news Mondays. So it makes it a no news Monday, which is shop. And it's the week before really important holidays where no one trades. So that leaves Monday a really bad day to trade. And Tuesday, it's the day before the holidays. The same applies to Friday, that it's the day after the holidays and before the weekend. So I don't think it will be the best days to trade. And that's it. Once again, bye-bye.